Let's take a look at a trade that I took on gold. So here on the weekly time frame, I identified a weekly bullish fair value gap, and my bias was bearish because I expected price to trade below or trade towards the weekly bullish fair value gap. Heading to the daily time frame, okay, besides this daily bullish order block, okay, the daily bullish fair value gap has already been mitigated, so I wasn't concerned about that, right? So okay, then let's just leave it on here. Okay, on the 4 hour time frame, you can see that there isn't really much besides this 4 hour bearish order block, right? And yeah, nothing near our price action. Only 1 hour here. You can spot a 1 hour bullish order block right here, and also a 1 hour bearish family gap. Right? But when I was identifying price, I I didn't label this point of interest, right? So I was only looking out for the liquidity sweep, right? So yeah, like this. So only 1 hour, right? Since my bias was bearish, I was focusing on sell positions. So I saw this change of character on the 1 hour time frame, and it also gave us a 1 hour bearish fair gap. So I was looking for sell positions. I saw this liquidity sweep, right? So I expected price to hit towards the 1 hour bearish fair value gap. But the thing is, there's a third candle here, which is a long wick candle. So there's a high chance that price wouldn't trade back into the 1 hour bearish fair value gap, right? But it's a bullish candle also. So, okay, but the main thing is the long wick, which kind of made me infer that price might not hit towards the hourly bearish fair value gap. Right. So I was looking for entries on the 5 minutes. So on the 5 minute time frame, you can see that after the change of character, okay, and the sweep, um, price headed upwards. Right. And on the 5 minute, I was looking for a 5 minute change of character. Okay. And here it gave us the 5 minute change of character with your body candle close, as well as a 5 minute bearish fair value gap. So as price traded into the fair value gap, I entered for a trade. So you can see that I almost got stopped out here, right? And I really wanted to exit with a loss, right? But my stop loss was here and I trusted it. So stop loss was above the 50% of the 5 minute rejection block and also above the 5 minute bearish order block, right? So only 1 hour. The reason why I didn't exit early was because the main reason was because of these two inverted hammers that formed, right? As it formed, I trusted the stop loss. So as it headed downwards, I was a bit skeptical about the trade already because it was taking a bit long for the trade to play out. So as it headed downwards, somewhere around here, I took a profit. So I exited below the stop loss. Yeah. So these two candles, this price action gave me confirmation that price was actually about to head downwards. So as headed here, I took um, profits and exited the trade. And yeah, because I realized that price might actually hit upwards towards the um, 1 hour bearish fair value gap that we actually drew, and indeed it happened and it pumped all the way upwards. So yeah, that's a good that's a good realization, right? So why did this trade not work out? It's because my high time frame narrative was wrong, right? So actually the third candle here closed above the previous day's high, right? So as it closed above the previous day's high with your body candle close, we can expect price to hit upwards even more, right? So we shouldn't. It was a wrong assumption to think that price will hit towards the weekly bullish fair value gap, right? So as it closes above, price is more likely to hit upwards than downwards, right? It's more likely to continue upwards. So yeah, And also additionally, price was in fact reacting off the daily bullish order block, which is what gold always frequently likes to do, which is to respect order blocks, right? Yeah. And yeah, even though fair value gaps will be mitigated, the order blocks will always, or most of the time, will work out. So yeah, for our yeah. So even though there's like for our bearish order blocks here and there, this will be our point of interest where we take partials, right? So you take, even though we are in between, for example, let's say okay, let's say only 1 hour. Okay. So these are the point of interest where we can take partials, right? So here you can see that, for example, this order block. This, you can see that we are in between two order blocks. So the thing here is these are yeah this can act as point of interest for us to take partials, and we should expect them to break because firstly our higher time frame is currently bullish and we have just swept sell side liquidity. So price is more likely to hit upwards to break this bearish point of interest, right? So yeah. So if we were to take this trade again, right? Yeah. So one main thing is also that I didn't identify this 1 hour bullish order block, which was also important. Right. I was only concerned about the 1 hour bullish fair value gap, which got mitigated, so I didn't do it. Right. But here the order block was important because liquidity actually got set below the order block, right? And this was a major swing point. So as you can see, every time a major sell side liquidity has been swept, price will hit upwards by a lot. So here, hit upwards by 180 pips, right? And here, in fact, went to all-time highs, right? So after this major sweep, we shouldn't even be looking for a change of character, right? This change of character is literally inside of the 1 hour bullish order block, right? Yeah, so this was really a rookie mistake. Bullish order block, yeah. So the change of character shouldn't even be looked into, right? So this hourly bearish parallel gap was just for price to hit downwards, right? So after a sweep, we can hit to the, let's see if there's anything on the 15 minutes. Yeah, so what we want to see is a change of character, right? So this change of character isn't valid. So say this will be a good change of character right here. So after this change of character, wait for price to give us a fair value gap to enter from. And in this case, again, price tap into the 15-minute bullish order block to hit upwards, right? Yeah. So the order blocks will always work out. Sorry, not always. Most of the time will always work out. Okay. Yeah. But if I was actually trading, right, I'll be looking on the 5 minute because our high time frame point of interest is the hourly bullish order block, right? So okay, maybe the 15 minutes is better because here I can see that there's way too much order blocks. I mean, way too much fair value gaps. There's a lot of small order blocks, but what really matters will be the high time frame order block, right? Yeah. And also another thing is after the liquidity sweep, I didn't saw any bullish fair value gap fair value gaps being formed, right? That's why I was a bit skeptical about this liquidity sweep. Yeah, that's one main thing. But I guess as long as eventually will form a liquidity sweep, I guess. I mean a fair value gap, which is right here, right? Yeah. So that's one lesson. I guess a fair value gap, it doesn't have to be immediately formed. Right? As long as it creates like a change of character, right, then we can be certain that it was a liquidity sweep, right? So after this major sweep and that there's a hourly bullish order block, we can expect price to head upwards, right? So yeah, sorry, 1 minute. Okay, you see price hit upwards and came down to the 1 minute bullish order block. So let's say we enter here. Let's say we were to enter here for stop loss here. TP. Okay, let's say we are aiming for the hourly bearish. This would be a 1 to 6, right? This would have been a simple 1 to 6. And if we were to aim higher to the other block here, let's say we were to aim for this. Well, imagine 1 is to 76. 20 times 76. 760 times 2. Maybe in a 1.5k trade. But obviously the stop loss can be that tight, right? So yeah, stop loss can be that tight. Yeah, there would have been a sniper entry like this, 10 pips. Let's say below this. 50 minutes. Maybe I will put it below the outer block. Right, probably right here. Okay, that would be more sensible instead of like putting here. Because price always like to sweep below the outer block, right? So let's say we put it here. Right? Okay. 24 times 20. 480. Yep. $480. Yep.